Hello, in today's video we'll be taking a look at the Tuesday, April 7th, 2026 trading session for three different symbols. The main symbol we'll be looking at is the SPX CBOE index. We'll also be taking a look at the trades on the XSP, which is the SPX mini index. And finally, we'll take a look at the SPY. So first off, we'll take a look at the SPX index. We're utilizing in all of these trades the day trading GPS Daily Key Levels V3.0 indicator. For the SPX, we're using the SPX Daily Key Levels V3.0 indicator, as well as a free tool to help confirm entries, and that is Annie's ribbon, which is also a TradingView indicator, which is free on TradingView. The SPX Daily Key Levels V3.0 indicator is a paid indicator on TradingView. We'll also be using those same two indicators for the XSP SPX Mini Index. And finally, for the SPY, we'll be utilizing the Day Trading GPS Stocks ETFs Daily Key Levels V3.0 indicator for TradingView, along with the free tool Annie's ribbon. Okay, so we'll start off with the SPX index here. On this particular index, we have one bearish trade in which the scalp only trade went for a profit of $930 per option. The regular trade at the minimum profit threshold target went for $1,880 profit per option, and the same trade at the ideal minimum threshold target went for a profit of $2,410 per option. So in this particular video, this is going to be a condensed, shortened video. If you'd like to know more about how any of these indicators work, the SPX Daily Key Levels V3.0 indicator, or later on we will look at SPY for the Stocks ETFs Daily Key Levels V3.0 indicator, you can look in the descriptions of this video, and there will be links to other videos on those particular indicators which go into more detail about the trading strategies and the indicators themselves. We're not going to go into all the details about every aspect of the daily key levels trading strategy or the indicator. If you want to know more, you can just simply go to those links in the description of this video and view those other videos. Okay, so today we have the 9:30 a.m. BBKPL, that stands for Bull Bear Key Price Level. The Bull Bear Key Price Level given today by the Daily Key Levels V3.0 indicator is 65.8404. Now we also have Market Scenario 6, which is the market structure for today's session given by the indicator, which is high volatility, wide pre-market range. What that means is that the pre-market high is greater than yesterday's daily RTH session high, and also at the same time, today's pre-market low is lower than yesterday's RTH session low. That RTH session low is the YDL level, the PML is the pre-market low, the YDH is yesterday's RTH session high, and the PMH is today's pre-market high. The YDC level is yesterday's daily close for the RTH session. Okay, so we have the 9:30 a.m. BBKPL level alert, which is giving us our bearish entry signal here on the 9:30 a.m. candle. As you can see, it was a very long candle, but it did close below the bull bear key price level. This alert only shows if there is a close above or a close below the BBKPL level on the 9:30 a.m. opening candle, and it also must be within the acceptable range for that close, either above or below the BBKPL level. If the candle for the open is too overextended for being within the acceptable range for a close above or close below the BBKPL level, then you would not see this label. In this case, you're seeing the bearish entry signal label. If this was the exact opposite, and this was instead a close above the BBKPL, you would instead be seeing a green label here, and we would be looking at a bullish trade entry signal given by the Daily Key Levels V3.0 indicator. We're also using our free tool from TradingView, which is Annie's Ribbon, which is a moving average ribbon, which is comprised of many different moving averages. And as you can see here, this is also all red and giving us a bearish entry signal. So this is also confirming the bearish entry signal being given by the Daily Key Levels indicator. So this is our entry confirmed by the ribbon for this. If instead we had a multicolored ribbon, then we would possibly not do this trade if in fact this ribbon was partially green and partially red, or in the case of this ribbon being green and having a 9:30 a.m. BBKPL bearish alert on this, then there would be absolutely no trade on that because we are getting a conflicting signal. So what we're looking for is quality entries where both the signals are being confirmed. The signals with the V3.0 indicator for the SPX daily key levels are either closes above or closes below the main key levels or one of the 5 contextual levels. The main key levels with this indicator are the bull bear key price level, the R1 through R6 levels, which are shown down here again in this table, as well as the S1 through S6 levels. So we're looking for closes above and closes above below those various levels or the contextual levels. We're also looking for any entries, whether bullish or bearish, to be confirmed by the ribbon indicator. Okay, so in this particular session, we have some wild volatility today, mainly due to the continuing news that's going on about the Iran war. And so we still stay in an elevated VIX environment where we have expensive options and we have elevated volatility. Now, as far as this market scenario 6, with this particular indicator, you do have this market scenario analysis table here, which you can turn on. And if you have it turned on at the first tick of the 9:30 open, then you will see a market scenario analysis table come up on your chart, which will give you an explanation of what exactly this market scenario means. There are only 6 different market scenario structures that SPX can open up in on any given day. So this indicator analyzes the market structure for the session, and at the first tick of the 9:30 open will give you not only the what market scenario you're in here on this table, but also if you have this table on, then you can also see the explanation for this market scenario along with the dominant tendencies, what to expect, and also key trading characteristics to keep in mind for this particular market scenario, and also what key levels take priority in this market scenario. We also have PDF one-page cheat sheets for the market scenarios if you don't want to have the market scenario table on your chart. The market scenario table is resizable. You can make it smaller or larger so it doesn't take up as much space if you don't prefer the default size. And I will go ahead and show you the PDF one-page cheat sheets now. Okay, so when you purchase this daily key levels indicator for SPX, you will get not only a comprehensive detailed user guide on how to trade and how to use the indicator included with your purchase. That's a PDF document that you can download and print. You will also get a link to the PDF cheat sheets for the 6 market scenarios. So as you can see here, it starts off with a summary of each one of the different market scenarios along with an explanation. And then here we have PDF one-page cheat sheets. These can come in handy for either studying offline, or you could download them to your computer and put them up on a separate monitor, or you could simply download them, print them out, and keep them next to your keyboard. As you can see here, we have market scenario 6. This is the highest volatility scenario of all of the 6 market scenarios. And as you can see here, this also goes through a visual structure and explanation of what this market scenario means, as well as primary tendency, key trading characteristics, what to expect, and also some trading tips. And in the case of this particular market scenario, an additional risk warning because of the extreme volatility. Okay, so with this particular indicator, there are 3 different option strikes that you have at your disposal for any bullish or bearish trade off of any one of the key levels. In this case, the trade is off of the bull bear key price level, and it is a bearish trade. So we have 3 different put options at our disposal. The first put option is going to be the strike that is closest to the level we're taking the trade off of. In this case, that's the bull bear KPL level, 65.8404. And so that is going to be the 65.85 call option. The second call option that you have is going to be slightly out of the money, and that is going to be the strike that is closest to the midpoint level that is below, since this is a bearish trade, the first midpoint level below the level that we're basing the trade on. So in this case, mid BBKPL S1, 65.7164. So that is your 65.70 put option. And finally, the third option that you have and the furthest out of the money is going to be the option strike that is closest to 1 full key level away in the direction of the trade from the level that we're basing the trade on. In this case, we're trading from the bull bear key price level, so that would be the S1 level 65.5924. So that is going to be the 65.60 put strike. We're using 0 DTE options. You can also use 1 DTE options if you prefer to use those. We do have a video which explains some of the pros and cons of using a 0 DTE versus 1 DTE for day trading. And that link is also in the PDF user guide and manual for this particular indicator. So we have here the 930 ask prices on the close of this candle. We're on a 2-minute chart. The chart time frames that are recommended to use with this particular indicator for the daily key levels trading strategy for day trading with this indicator are between 1 minute and 5 minutes. So 1 minute chart, 2-minute chart, 3-minute chart, or a 5-minute chart, depending on your preference. However, if you look at some of our other SPX session videos, you will see that we always use the 2-minute chart. We have found that to be the best performing chart time frame, the most consistent performer within that 1 minute to 5-minute range. So on the 65.85, again, we have elevated volatility today. So due to the VIX being in the mid to upper 20s at the start of the session, we have more expensive options than usual. So the 65.85, the close ask price on the close of this 9:30 a.m. candle is 26. So that's going to cost you $2,600 per option. If you're not familiar with how options work, you take the price of the option, you multiply it times 100, and that is your cost per option. The 65.70, the cost is $19.20, the ask on the candle close. And finally, the 65.60 is $15.50 on the ask on the candle close. Now with the daily key level strategy with this indicator, there are 2 different types of trades that you can do. One is a scalp only trade, and the other is called a regular trade. With a scalp only trade, we're looking for a 1 level move in our favor. That 1 level move is calculated from the level that you're taking the trade from. We look in the direction of the trade, and in this case, that's down. So 1 full level away, 1 full key level away is the S1 level. So here, on the 10 a.m. candle, we have a hit of the S1 level. Here we have the bid prices, 35.30 for the 65.85 put, 25.90 for the 65.70 put, and $20.60 for the 65.60 put. So on this scalp at the 65.85, that is a profit of $930 per option. On the 65.70, that is a profit of $670 per option. And on the 65.60s, that is a profit of $510 per option. On a scalp trade, you're looking for the quick in and out. You're exiting 100% of your position on a scalp trade, and then you're looking to see if price action gives you another opportunity at another key level for another trade, along with being confirmed by the ribbon indicator. The other type of trade is a regular trade. With a regular trade, there are two initial targets. One is the minimum threshold target, which is a 1.5 level move in your favor. The other minimum target is called the minimum ideal threshold target, and that is a 2-level move in your favor. Okay, so at 10:06 a.m., we have a hit here on this candle of the mid S1, S2. That is 1.5 levels from the key level that we took the trade from, the bull bear key price level, excuse me. Okay, so in this case, when you hit the minimum 1.5 level move in your favor, with a regular trade, you have several different options with this indicator. And these options would be the same either at the 1.5 level move or the 2-level ideal move. The options are as follows. A, you can either exit 100% of your position, regardless of how many contracts you have, just like you did with a scalp, except you will have more profit. The second option is that you can instead go ahead and adjust your stop loss to break even. So the stop loss at the beginning of this trade, since you are taking the trade from the bull bear key price level and it is a bearish trade, you have a choice of two different initial stop loss options with this indicator. And on either the bull bear key price level or taking trades off of the R or S levels, the two stop losses are determined by the QL levels and the midpoint levels. On bearish trades, it's going to be the QL above the level you're taking the trade from. And on bearish trades, the standard stop loss is going to be the first midpoint above the level you're taking the bearish trade from. In this case, that would be the QL above BBKPL for a tight stop loss, or the midpoint above the BBKPL for a standard stop loss. As you can see in this case, in this session, neither one was hit. In the case of a bullish trade, if you were taking a bullish trade, the QL level below the level you're taking the bullish trade from is your tight stop loss level, and the midpoint below the level you're basing the trade on is your standard stop loss. So going back to the regular trade, at the point of hitting the minimum 1.5 level threshold move in your favor on a regular trade, you can, as the second option, instead adjust your stop loss to break even, or break even plus a small profit buffer on top of break even at that point, and keep all your contracts, and instead wait for the next key level move in your favor to begin either scaling out or exiting all of your positions. So how you do that at that point is you are not changing it to the bull bear key price level as far as being break even. What you are instead doing is you are making your break even the price that you paid for the option. So in this case, if we were moving this to break even, we would then take off our level based stop loss, and then we're changing it to a price that we paid for the option based stop loss. So in the case of the 65.85, we would move our stop loss to 26 if we're only moving it to break even. If we were adding an additional profit buffer, we would add roughly 10% on top of that, so that would be roughly 28.50 or 28.60. In the case of this option, we would be moving it to $19.20, and in the case of this option, $15.50. The third option that you have when it hits the minimum 1.5 level move in your favor on a regular trade is that only applies if you are trading 3 or more contracts. If you're trading 3 or more contracts, then the final alternative that you have is that you can exit somewhere between 60 to 90% of your original position and close it out and secure that profit at the 1.5 level move. And then on the remaining position, you then adjust your stop loss to break even or break even plus the profit buffer. And then from that point on, you are managing your trade for the remaining runners level to level as price continues to move in your favor. So at that point, you've closed out 60 to 90% of your original position to get the profit locked in. And then on the remaining runners, if price happens to continue to move down in your favor, 2 additional key levels that would be in your favor after mid S1, S2, then at each additional move in your favor, as price continues to move. So for example, if we were moving down to S2, that would be another waypoint for your remaining runner positions to either exit all of them, exit some of them, or continue to adjust the stop loss further on all of them. If we turn the midpoint level on between S2 and S3, that would also be an additional waypoint. And then S3 would be an additional waypoint after that. So every midpoint level and every main key level after that. Also, if you do have a contextual level that happens to appear after the 1.5 level move, then those would also count as additional waypoints as well. So on this 10:06 a.m. hit, we have 44.80 on the bid on the candle close. Again, that's the candle here, the 10:06 candle, hitting the mid S1, S2 level for the 1.5 level move. 44.80 is the bid on the candle close, and that is going to be a profit of $1,880 on the 65.85s. 34.10 is the price on the bid on the candle close for the 65.70s. That's a profit of $1,490 per option on those. And finally, on the 65.60s, $27.80. That's a profit of $1,230 per option on those. Now here on this candle here, on the 11:06 a.m. candle, we have a hit of the S2 level. That is now what is known as the 2-level minimum ideal move in your favor. The reason that the 2-level move is the ideal move is that in most cases, in most sessions, a 2-level move is going to be the extent of most moves in most sessions. Now in high volatility sessions, that's normally not the case. Normally you'd be looking at more than 2 in high volatility sessions. However, in most of your normal sessions throughout the year, the 1.5 to 2 level move is going to be the extent of most moves on most days for SPX. Okay, so on the 11:06 a.m. candle, we have a bid of $50.10 on the close of that candle, and for the 65.85, that is a profit of $2,410 per option. On the 65.70s, it's 37.80 bid on the candle close. That is a profit of $1,860 per option. And finally, on the 65.60s, it is $30.60, and that is a profit of $1,510 per option. Okay, so before we go on to the XSP chart and look at the trades on the SPX mini index and also finally look at the SPY index, the SPY ETF. If you are interested in purchasing either the SPX Daily Key Levels V3.0 indicator or later on when we look at the SPY chart, the Stocks ETFs Daily Key Levels V3.0 indicator, in return for you taking your time for watching this video today, you can request a discount promo code that is good against purchasing lifetime access on either indicator by simply sending us an email at daytradinggps@gmail.com to request that discount promo code. Now we'll take a look at the other two charts. Okay, so now we're on the XSP chart. This is the S&P 500 Mini SPX Options Index, and this would be for traders who still want the benefits of trading SPX options. There are some benefits over SPY, which you can look up by either going to Google XSP options versus SPY options. What are the pros and cons? Or you could look it up on ChatGPT, and you can look at their explanation of what are some of the pros of XSP versus trading SPY. Okay, so it's the same setup here. We have the BBKPL close below alert here on the XSP. We have the ribbon red again, so that's giving us our confirmation. We're only going to look at the standard play at the money option on the XSP. So for right now, we're just going to try to keep the video shortened. So on this chart as well as the SPY chart, we'll just be looking at the standard play, not all three option strikes. Okay, so in this case, you would use the 658. That is going to be the standard strike that is closest to. XSP trades in 1-point increments versus SPX trades in 5-point strike increments. So the closest strike would be either a 658 or a 659. Since this is slightly lower than the halfway point between those two at 658.40, then we're going to use the 658. So the 658 put is $2.37. So that's going to cost you for each XSP option $237. Now keep in mind with XSP, if you have the money in your account where you could have traded one SPX, basically you can trade about 10 mini SPX options on the XSP. So that can give you some other scaling out options. If you do have an account size where you do have the ability to trade one SPX option, you may want to consider XSP as an alternative if it's more important to you to have the scaling out opportunities on regular trades for utilizing 10 of the XSP options for every one versus one SPX option. Okay, so on our one level hit of the S1, that again occurs at 10 a.m. here. So that's the one level hit for the scalp only. And the bid on that option and the close of that candle is $3.14. Then on our hit here of the 10:06 a.m. of the 1.5 level move in our favor, the bid price on the close of that candle is $4.01. On the 11:06 a.m. candle down here where we have the touch of the S2 level and the 2-level ideal move, the bid price on the close of that candle is $4.46. Now as you can see here, after it hit the 2-level move, then it began its move back up. So one thing to keep in mind with this particular indicator is that you can take bullish or bearish trades off of any of the main key levels. Again, the main key levels with this indicator are the bull bear key price level, the S1 through S6 levels, as well as the R1 through R6 levels, and also the contextual levels. The contextual levels with this indicator again are the PMH, the YDH, YDC, YDL, and PML. For taking trades with the 5 contextual levels, you instead are utilizing in the user control panel, you are selecting either a tight stop loss or a standard stop loss, and you're also selecting your risk reward, your target exit with trades off of any of these levels as well. So there's a bullish trade section for these levels, and there's also a bearish trade section for these levels in the user control panel. And those stop losses are displayed on the screen once you select which level you would like to take the bullish or bearish trade on of these 5 contextual levels. And then you select your reward take profit level, which starts at a $2 of profit for each dollar of risk on your stop loss. That you can move up in 0.25 increments all the way up to 30 if you're looking for a more extended trade. You can also lower it all the way down to 0.25 if you're just looking for a micro scalp. Okay, so now we're going to take a look. So one of the reasons I wanted to bring that up is, as you can see here on the S2 level, this is where we get the bounce and the turnaround. So you could also take a bullish trade down here off of the S2 level. And if we took a bullish trade off of the S2 level, then either we would already have these levels turned on, which you can turn on any of these levels beforehand in your settings and save them as the defaults if you want, or you can just turn them on as price action dictates. But as an example, if we would go ahead and turn on the QL below S2 if we were looking for a tight stop loss, and we would also turn on mid S2, S3 if we also wanted to consider the standard stop loss. So as you can see here, this is the QL below S2. This would be your tight stop loss on this bullish trade if you wanted to take that. And again, if you took this bullish trade here, then on a scalp, you're looking for a 1 level move back up to S1. Then your 1.5 level move would be the first midpoint above that. And then a 2 level move would be all the way back to the bull bear key price level. The standard stop loss would be the mid S2, S3 level because that is the first midpoint level below the bullish trade, the key level you're taking the bullish trade from. Okay, so now we'll finally look at the SPY chart. Okay, so we're on the SPY chart now. You can see we have the same setup. We have the opening 9:30 a.m. BBKPL bearish entry signal alert here on the opening candle, and on the close of this candle the entire ribbon has now turned red. It was multicolored here, however on this particular candle it does turn all red. If you wanted additional confirmation of the transition from the part green and part red here, then you could also wait for this candle here if instead you wanted additional confirmation. On the 9:30 a.m. candle close, we have the 656 put. So that is, again, the closest strike to the bull bear key price level, the price level that we're basing the bearish trade on. So that is the closest strike. The ask price on the 9:30 a.m. candle close, $2.58. So that is going to be $258 per SPY 656 put. Here on the 10 a.m. candle, we have the hit of the S1 level, that's your scalp only exit, and the bid on the close of that candle, $3.49. Here on the 10:06 a.m. candle, we have a hit of the mid S1, S2. That is a 1.5 level move in our favor on this trade. The 10:06 a.m. candle, the bid on the close, $4.42. And finally here, on the 11:06 a.m. candle, we have a touch of the S2, and on that we have a close of $5.20. Okay, so as mentioned earlier, in return for you taking your time for watching this video today, if you are interested in either the stocks ETFs Daily Key Levels V3.0 indicator, which is good for trading stocks and ETFs on NASDAQ, NYSE, Amex, and the over-the-counter market, including the large ETFs such as SPY, QQQ, and the IWM, then you can send us an email at daytradinggps@gmail.com to request a discount promo code to use for lifetime access to this indicator. If you are instead interested in either trading the XSP or the SPX, then you can also request a discount promo code for the SPX Daily Key Levels V3.0 indicator, again, for lifetime access for that particular indicator. Also, some of you may also be wondering how this indicator is working for the people who have already purchased it and use it on a daily basis. And right now, we would like to show you some of the feedback and user reviews that we've received from people that utilize the indicator. Thank you again for taking the time for watching this video today and supporting our channel. If you did like the video, please hit the like button, as that helps us with the YouTube algorithm, so we would greatly appreciate that. And if you'd like to be notified of any new videos that we post on any of our daily key levels indicators for futures or for Forex and crypto, stocks and ETFs, SPX, or the NASDAQ index, please hit the subscribe button to be notified of when we post new videos. Okay, so for those of you who might be wondering, well, how is this working for people that have purchased the daily key levels indicators? You can go to daytradinggps.com and look at the user reviews and feedback. We've just taken some of them here and highlighted parts of them, but we invite you to go to daytradinggps.com and look at the reviews and trader feedback on our various daily key levels indicators, including the SPX Daily Key Levels Indicator. Thank you.